Welcome to today's Daily Report Market Analysis videos with me, Richard Perry, Market Analyst at Hantec. On Tuesday, the 9th of June, big question, is this the start of the risk rally correction? Now, what we've seen in the past few hours really, we've started to see this correction coming back. Sort of early signs of it were in the handover from the Asian session. You could argue even into yesterday, because actually looking on my chart of the day, which is euro yen, we started to see the falling away yesterday. But it's interesting that we've started to see signs of dollar support coming in. Dollar been under so much pressure throughout this risk rally. We've started to also see that the US 10-year Treasury yield has started to fall over. That is, again, there's a reversal of some of that move that we saw last week. US futures off the top, only slightly though, after the S&P 500 stormed to gains for 2020. What a remarkable statistic that is. But generally speaking, look at this, the DAX coming up 2% lower, FTSE also sort of 1.7% lower. A little bit of a rebound on gold. How does that play into the potential risk correction? Aussie and Kiwi, look at that, 1.5% Aussie, 1.2% Kiwi lower. So are we starting to see some of this risk rally unwind? The oil price down yesterday, down again today. We haven't had two negative sessions, certainly two decisive negative sessions in a row since the recovery started. So there really are a few questions now starting to be asked about how risk responds in this move now. In terms of data points today, not a great deal, to be honest. We've got the Federal Reserve meeting tomorrow. There might be a degree of caution in front of that starting to creep in. But it's interesting that markets are still moving on this risk trade, and the question would be how the Fed actually plays into that tomorrow, but I'll talk more about that tomorrow in the videos. In terms of data points today, the jolts for the US is in the afternoon. This morning we've had the EU growth data, which is slightly revised up, but to be honest, it's not even touching the sides in terms of how markets are looking. Jolts are expected to fall sharply, 5 million jobs in April. This is pretty backward looking stuff, April jobs openings, especially considering how the payrolls report came out on Friday. You'd want to see more up-to-date data to take a real steer from. But yeah, 5 million jobs down from 6.2 million jobs last job openings, that is, for March. So in terms of my chart of the day, euro yen, I think we get a real steer as to exactly how risk appetite is going. Euro has had a huge run higher in the past few weeks. But this is an evening doji star 3 candlestick setup. Strong bull candle, doji, strong bear candle. That is a 3 candlestick reversal, which again adds into, look at today's move, again sharply lower. It's closed decisively below 22.85 yesterday, and again we're now testing that 21 figure to 21.40, that breakout band of support from February, March. I think underneath 21 figure you really start to see the correction gathering momentum. You've already seen RSI crossing back under 70 from above 80. You've started to see stochastics. Are they going to confirm a sell signal? I think probably so. And you can easily see this one unwinding. 20 big figure, basically where that uptrend comes in today. That is very realistic, I think, if we do see the move going. You can see on the hourly chart here, if I put the cross there on the sort of latest area of support, which is 21.25 area, if you breach that, well, there basically is no support until 20 big figure. So I think a retreat back to the uptrend at the least, I think, could well be seen in the coming days. Now in terms of resistance, again interesting on this chart is this band between 21.80 to 22.60. Old support became supportive on the way down, broke, so that is now resistance, and you've got the resistance of the old resistance, 22.60. Having broken it yesterday, it became a basis of resistance again. So nice band of resistance, 21.80 to 22.60. on this hourly chart. So yeah, we're looking for this continue to retreat, and obviously that would suggest yen strength and euro weakness as the euro unwinds some of the really strong run higher. But with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos. Go to our website, sign up for our webinars, and you can click to watch our Trader Talks videos to gain some top trading ideas.